Hello folks, now just a little thought here. If you had a little bit of money to save, right, and you put that in a bank or a building society or somewhere where they give you interest, in the United Kingdom, elsewhere too, the government will tax you on the interest at the standard rate of income tax, assuming you're a taxpayer. Assuming you ain't earning megabucks. Yeah. Let's think about this. If they're taxing you because you've made money, that money, what you've got in the bank, that sounds fair enough, doesn't it? If you put a tenner in the bank, you've got 5% interest on that, so you've got 50p. At the end of the year, you've got £10.50. That initially sounds alright, doesn't it? So if the government take 10p, you end up with £10.40, think, well, that's alright, because I've made 40p. But you haven't. Because there's a thing called inflation. But that £10.40 is not going to buy the same amount of produce as original tenner you've bought at the start of the year. Right, so let's suppose that tenner at the start of the year would have bought 10 loaves of bread, which would have been your favourite type of bread, or it might be 10 boxes of cereal that you have for your breakfast. Whatever it is, doesn't matter. At the end of that year, adjusted for inflation, £10.40 is not going to buy the same amount of goods, as I say, as £10 would have at the start of the year. Might need 11 quid or 12 quid. We all know that the amount of interest you get on your savings does not keep up with the real rate of inflation. And in fact, a lot of savings account, if you've only got a little bit of money, they won't pay you the 5%. Yeah, they'll pay you 5% or whatever it is, the bigger percentage, if you've got more than, say, 1,000 quid in there. If you've only got a few hundred quid, you might only get 1 or 2% interest. You'll still get taxed on that. Effectively, at the end of the year, if the money you've got in your savings can't buy as much as it could at the start of the year, even with the interest added, you've made a loss. Now the government have just taxed you and made that loss even worse. Now how can the government tax you a loss? I mean, if you was a company and you make a loss, they don't tax you. But if you're a person and you've got savings, and those savings don't keep up with inflation, even with the addition of interest payments, they still tax you. You're lost. So, it's just a thought. Has somebody got their head up somewhere where they've got their anatomy where the sun don't shine? I mean, if something don't seem right here, I just sort of run that by people, and if there's any financial people out there got any suggestions or ideas on that one, or perhaps can enlighten me on that one. Anyway, just a thought. Cheers for now. Enjoy the mythical rate of inflation adjusted by the government to exclude the things that we mere people have to buy. You know, those frivolous, non-essential items like food, clothing, fuel, energy, all them things what's rocketing up at 10%, 8.3%, 12%, and all the other percentages, which seem to be a little bit tad higher than the mythical government inflation rate, wherever they get their mythical figure from. I don't know what they base it on. I don't know. Perhaps somebody can enlighten me on that one. Anyway, cheers for now.